Hello and good morning, listeners. This is Almus Market Mornings, rounding up the global financial updates for you with Jayaram Krishnamurthy. Now, folks, I apologize for missing to mention a key event yesterday, but since the results were favorable, I assume it's all good. The Indian cricket team makes it to the finals of the World T20 tournament. And coming back to the financial markets, it's the US core PCE data today as we move our attention to the market actions and reactions to this particular data because yesterday's US GDP data, along with the jobless claims, barely moved any of the currencies. On the domestic front, the incursion date is here. Today onwards, Indian bonds will be included into the JPM index. So, JK, what do you think of these developments? How are we closing this week?
Hey, good morning. Yes, like you said, India stormed into the finals and dollar yen also stormed above 161 today. And no stopping the yen weakness because Japanese authorities are really at a fix because earlier intervention has not really worked. We are back at new highs after they spent a lot of money in April, May, and nothing is making a difference. I feel uh, only thing that can come to the rescue of yen further weakness is sharp rate cuts from Fed, and that is not foreseen right now, or monetary policy tightening by Bank of Japan, which I won't totally rule out, but the probabilities are low. Whether they can do it in July, and if July is already been discounted by the market, it may not have. But I think there has to be some surprise element, intermitting policy change or something like that, along with intervention. And more so if they can rope in the Fed also to join in intervention. I think these are the only conditions in which I can see a sustainable reversal in the yen trend. Otherwise, I think this is going to go on. And not much relief for the other currencies as well, because euro is still trading below 1.07. Bit of a knee-jerk strength after the US data yesterday, but the trend is really down for the euro as well. Seems headed for 1.06 ahead of the French election outcome, the first round of election being held on Sunday, and then the second round on the 7th of July. But really, no one expects, the status quo to be restored, meaning the Macron, party is not going to have the same say in the French politics as they used to have. And then the Chinese one, of course, broke the 7.30 conclusively today, although it has come off a bit and with a slightly lower fixing by the Chinese central bank. So overall, we are continuing to see the dollar strength across. But we had quite a bit of data yesterday. The US GDP data was slightly revised upwards in the third estimate from 1.3% to 1.4%. And this was, the contribution came from consumer spending, but overall, the falling inventories and the higher imports have kept the Q1 GDP at much lower level compared to 3.4% that was seen in Q4 of last year. We also had the weekly jobless claims, which slipped slightly from last month. But important thing is the total outstanding claim, or what they call it as a continuing claim, the number of people on jobless rolls rose by 18,000. So that's something that number needs to be tracked. Weekly job numbers is something, but what goes on adding to the continuing claims is where the job market needs to be assessed, and that shows definitely some weakness. Durable goods orders also showed small rise, but it was definitely not as much, not as good as April. And then the transportation sector said actually the new orders were falling in May by 0.1%. International trade also showed deficit for goods increased 2.7% to 100.6 billion, and their overall deficit in April, including services and commodities, was at 74 billion. So the importance of this increasing deficit, which is on from September 2023, is that at some point, the policymakers will have to prefer weakening the dollar just to ensure that their imports are curtailed and the export competitiveness picks up. So the overall the data did not make much of a difference to the markets. Stocks were very much in a choppy range, waiting for PCE core inflation. Yields came off, of course, by 6 to 7 basis points, more because market is buying bonds as a safe haven ahead of Eurozone event, Eurozone, French election ahead, and also maybe the PCE core inflation, which is expected to show a flat, rather 0% increase in headline month on month. And all parameters, including the core month-on-month and the core year-on-year, are expected to show a decrease. So this is already discounted by the bond market by the fall of 6 to 7 basis points on the reading again. Of course, we did have a presidential debate, the first presidential debate today between Biden and Trump, and it does look as if the performance of Trump has been much better received by the observers, and seems like he has gained more points than Biden in the particular debate. Of course, this is the first of the 3 debates that they will have, and yes, market has something more to chew on, but a lot more to look forward to. PCE core inflation today, the French election this week, and the next week. Yeah, so that's it. Thank you all, and of course, we wish the best luck for India. Hope they turn things around in this final, unlike the one-day international World Cup. Thank you.
Definitely, JK. This time it's going to be the Indian flag being hoisted at the highest levels for the victory in the finals for World T20, folks. On the financial markets front, yes, the yen was storming above 160, and as JK mentioned, it needs major steps by BOJ and also some participation from the other central banks to bring this particular trend to a halt, or let the currencies have a breather. On the other front, we have the French election exit polls over the weekend, which shall provide some sort of cues on the euro action going forward. And the market participants seems to have also prepared themselves, positioned themselves for the same. The US front, yes, there was a slight upward revision for GDP, slipping of jobless claims and other data point releases, but not much impact on the market as we can see. One thing that is quite interesting to watch, and JK, we should also let others have a look at these, as the Canadian inflation also came in higher than expected after the Australian inflation, which also remained sticky, just like the one released yesterday. So, folks, inflation continues to stay sticky, and that's what's the primary concern for all the central banks. And this is what is keeping them from going ahead with aggressive rate cut policy stance. So let's see how things go about. That's it for today, folks. We shall come back again on Monday. Till then, we close the session by saying TGIF, or thank God it's Friday. Thank you so much for listening.